what's up YouTube? This is Foxtail Digital coming to you again with Black Girl Stocks. And in this video, we're talking about where to start with options. Yay! People are making easy money trading options. You can profit if the stocks go up, down, or sideways. But where do you start? In this video, we're gonna cover the simple structure of how you can easily start trading options today. What options are? How much should you start with? Should you start paper trading? Which platform should you use? And a lot more. But if this is your first time watching this video, please make sure that you click that thumbs up button. It really helps the channel. Also subscribe and click that notification bell so that you get notified anytime I upload a new video for you guys. And just a disclaimer, you can find links to everything that we mentioned in this video in the description below. So there's a lot of information out there telling you how to make good money from options trading, but a lot of times they're missing the important factors that you need to know that can save you from destroying your investment portfolio and your trading experience. Whew. When you start trading options, there's three things that I want you to be thinking. Which direction will the stock move? How much will it move? And when could this possibly happen? Okay, so let's get into it. First, you'll need to apply for options trading. So anybody can trade options in their brokerage account if you get approved. I always recommend trading options on Webull. They're the best desktop and mobile app for trading. They're also giving away free stocks in crypto when you sign up. I'll leave the link below and you'll get 5 free stocks this month. Anyways, so you're gonna answer a few questions. The broker typically assigns you a trading level based on your level of risk. So that's usually gonna be between 1 and 5. 1 with the lowest risk and 5 being the riskiest. Now with an open option trading account, where do you find options to trade? Well, one way to find option trades is by joining my BGS option trading Discord group. So we have daily option trading ideas, trading tips, and a growing community of option traders. So it's a private group and I'll leave the link in the description below. There are also online platforms like Tiblio that provide daily and weekly option trading positions, and they're gonna have different strategies, calls, puts, credit spreads, iron condors. So I'll leave Tiblio's link below and make sure that you use that link so that you get 20% off of your first month. You can also create stock scanners that'll let you plug in certain filters so that you only find stocks or options that fit your trading criteria, your price, your risk amount, daily volume, option premiums. Learning how to build and start using scanners is going to be one of your key ways of finding good trades easier. So watch these previous videos to help you set up scanners. Theoretically, let's say we found a stock that we want to trade options with. So from here, we can start to build our option trading plan based on those 3 important questions that we mentioned earlier. Okay, so one way to answer these questions is when you start with the charts. Always start with the charts. So the first thing that you'll want to do is find the stock's direction and the overall trend. The trend is your friend, okay? And the trend can only be one of 3 things: up, down, or sideways. Not even just that, the strength of the trends. Is it a strong trend? Is it weak? Set your chart to show candlesticks. Trust me, you'll thank me later. Make sure you watch this video on how to read candlestick charts. Change the chart time frame to something further back, either daily, weekly, or monthly charts. And this is going to give you a bird's eye view of the overall stock price movement. Next, you can add indicators to your stock charts to help identify certain signals and trends in the market. There's so many different indicators to use. I'll leave a link to videos on the top indicators, RSI, moving averages, the ADX indicator, just a little bit more information on those. You don't have to use all of these different indicators to make better trades. It's not true. Learn it inside and out. Master that. As a guideline, if the moving average is sloped up, then the trend is up. If the moving average is sloped down, the trend is down. And this is always going to depend on the chart time frame that you're using. Keep that in mind. If the stock's price is above the moving average, the trend is bullish. If the price is below the moving average, then it's moving downward. It's bearish. And it also helps to draw trend lines in strong markets to find good entry and exit point. It's really like a roadmap for your trades. Now, once we have the trend, we can use it's really like a roadmap for your trades. Different techniques like support and resistance, indicator crossovers, and candlestick patterns to get an idea of how much and when a stock might move. Watch my previous video on the golden cross moving average trading strategy. It's a great bullish long-term signal for traders. So if you're interested in swing trading, definitely check this video out. Which option strategy should you use? So are we picking calls or puts? So just as a general refresher, an option is going to give you a contract that gives you the right but not the obligation to buy or sell 100 shares of a stock at a predetermined price called the strike price within a certain period of time, the expiration date. This list of what you see here is going to be called the option series. Now, all of this information listed out tells you everything about this particular contract. Looking at our options page, when you see these decimals, that's going to be per stock share. And remember, each contract represents 100 shares. So just multiply the decimal by 100. We picked the stock. We started with the stock charts. After we found the trend or whatever pattern that we're interested in, what direction is the stock possibly going to move? Up, down, or to the side? Another way to think about it is, who has more control at the time? Is it bulls, bears, or is it both? These are different ways that we can go about picking our option strategy. So just a rule of thumb, if you think the stock price is moving up, buy a call option. If you think the stock price is moving down, buy a put option. And if your stock has stayed the same zone for a long period of time or just a good while, and you think that it's going to stay pretty stable, then you can do more complex strategies like credit spreads and iron condors. This is just a very basic overview of what you can do with options trading. So I'll link a few videos about advanced option strategies in the description below. Now for the expiration date, the option time frame. So when do you see the stock making its move? Every option contract has an expiration period, and that's going to be the last day that you can actually exercise or sell your option contract. So you're going to see this listed as the expiration date in your trading platform. For swing traders, you don't want it too close. For day traders, it doesn't have to be too far away. It can be a little bit closer. Longer expiration dates give the stock more time to move and also time for your investment prediction to play out. The further the expiration date is, the more expensive the option contract is going to be. Now, I always advise you to close your option before expiration. And if you've heard of in the money, out of the money, all of these terms that describe the strike price, make sure to watch my video on in the money and out of the money options. I'll leave that link below. So starting out with calls and puts, in general, we want to buy something low and sell it high. So looking through the different lists of options, you're going to see different strike prices, different option premiums. You're going to see different volume and open interest. Now, you want these two to be fairly high. The higher, the better. And I'll leave a link below explaining why you want high volume and high open interest. Now, the things that make option prices go up and down, those are going to be things like the implied volatility and the option Greeks. Another rule of thumb, you want to buy an option that has lower implied volatility and sell it when it's high. If you buy in high and the implied volatility drops, then the option is still going to lose value even if the underlying stock price is going up. So the most important Greeks to focus on are going to be the delta, the theta, and the gamma. The delta is going to give you how much value your option gains per dollar increase of the stock. The higher the delta, the better. Now, the theta is the value for each option contract loss per day. So a theta of 0.20 is a 0.20 loss on the option premium every day that you keep it open. For long positions, long calls and puts, you want lower theta. And the last thing, the most important thing to keep your account growing is using an account management plan. One big question is, how much money should I start trading options with? When you're starting here, I want you to immediately think of how much do you want to make? Do you want to make $100 a day, $10 a day? How much do you want to make a week? And then from there, how much will you need to invest in profit to get that desired income? So start with the end in mind. For example, if you want to make $100 every day, what percent of profits will you need? Investing $1,000 and profiting 10% is going to give you $100. Easy. Investing $10,000 with a 1% profit is going to be another $100. Boom. That's the easiest way to go about how much to invest. Wrapping up The best practices when trading options are to first have an outlook of the stock's price before entering your trade. Where do you think the stock is going to go? Up, down, or to the side? Know the option volatility so you know whether or not you should go in a long position or a credit receiving position. You want to have an entry and exit strategy, and these are going to be the prices that you want to get in and the prices that you want to get out of your trades. And remember, for the exit, it's going to have two different options. One exit for taking profits, another exit for cutting your losses, okay? So you can find that with support and resistance, indicator crossovers. Cut your losses quickly, 20%. And for the size of your trades, don't risk more than 5% of your entire account on any trade. Have specific risk. A 2-to-1 profit loss ratio is pretty decent. So you'll risk $40 to make 80. For any beginner or anyone learning something new when trading, I always advise paper trading, and also make sure that you're journaling your trades. I have a few videos on Thinkorswim on how to paper trade options 24/7, how to practice your trades, so make sure to add these videos to your watch list. And also check out this video on how to use our breakout trading strategy. This is one of the top trading setups, finding high volume breakout trades, so make sure you give this a try. Check out this video. So thank you guys for watching this video. I'll catch you on the next one, okay?